You, the student, you, the student, benefits because you get it for free. Everything that you get with our service is free. Featured scholarships every week, and I'm going to go into that. But scholarships that I don't want you to miss out on. If you are of Haitian descent, the 509 scholarship is out and it's due November 11th. At minimum $500. The Dwellsy Scholarship. Now, this is a company that actually is awarded, and a lot of these companies are coming out where they're supporting you for housing, okay? And all they want to know is, what does housing security mean to you? 200, 300 words max, $2,000. That's due November 30th, okay? Someone from BC Trio has to win. You understand? Someone has to win this money. The next one that I want to feature is the Taco Bell Scholarship. Happens every year. I want you to win. Okay, this is due January 11th, minimum $5,000. Let's get it, guys. We pump these scholarships out to you because we want you to win so that you can get paid to go to college, okay? The other scholarship that I want to talk about, non-negotiable. Everyone here, everyone should be applying to the Broward College scholarships. I want to give a special shout out to our student of the month. I didn't even tell you, this is a whole surprise. Amelia Wentz, she is our scholarship plug student of the month. Why? Because she sets goals. Her goals are 3 to 4 scholarships a month. Okay, she already won one for $1,000. So congratulations to you, Amelia. On behalf of True Tread Tires, you get a $25 gift card courtesy of True Tread Tires in Davie, Florida. Okay, so congratulations on that, but keep them coming. I want to know we want to know if you're winning these scholarships. If you haven't applied as of yet, that's fine. Don't worry, keep them going. We will keep them coming so you can still go. So make sure that you are tapped into Google Classroom because we're putting the bulletins in there, featured scholarships every week, scholarship documents, anything, and we will review your essay for you. Make sure that you're clicking on that scholarship and clicking turn in so that we know that you have done it. Okay, and we can help follow up with you. All right, so just mark done in Google Classroom. If you're not in Google Classroom right now, please look out for an email from the scholarship plug or a text message for remind. Okay, so we're gonna put the links in the chat. Our services include bulletins. You get them monthly, weekly, essay editing, access to the scholarship database. Do you understand? You guys can get paid to be here. Be paid, get paid, especially if you're transferring to another school, so you don't have to have any barriers financially. Okay, so contact us if you have any questions. I will put the Remind link and Google Classroom link in the chat. Thank you for your time. You guys, let's get these wins, okay? Have a great day. Happy First Generation Day, Trio. You guys rock.
Keep it right there for a second. We're going to take a picture. Anybody want to take a picture? I see we have phones out. Please, this is vital information, guys.
Take a snapshot.
We all should have an Amelia screaming on this call right now. You have the opportunity to get free money. Scholarships helped me secure my degree, and that was just a stress relief that I'm just so thankful that grants and scholarships supported. So please, if you need help navigating, if you need help with us, get with your coaches, set up an appointment. Let's sit down, let's talk, let's get successful, right?
Yeah.
Come on, I need more energy than that, right?
We need more energy. Yes.
Early, you had a nap. You know you slept. Come on, guys. There you go. Thank you. Let's make sure let's make sure we play off of that. All right, Miss Cassius, thank you so much for joining us this morning. We certainly appreciate it. Another great resource here at Trio, guys. I'm so glad you guys are part of the family. But without further ado, we are going to introduce our next guest. I'm going to walk around and continue to pass out some more paperwork. But if we can
absolutely
see, oh, I'm sorry, Thomas, do your thing. I get excited when I'm introducing someone. I'm sorry.
But you forgot I was here, Bertram, for a second there. I get it though. I get it. The excitement, it's just too much. Yeah. PNC Bank has got an awesome presentation for us this morning. They've got a little workshop presentation here just for you guys. How many of you guys want to be better at managing your money? Come on. Come on. I'm among them. I'm among them. I want to be better at managing my money. Absolutely. So, so absolutely. You better get knowledge. Get that knowledge. All right. Without further ado, come on up. Let's give PNC Bank a hand, everybody. Woo!
You know what? I think I'm just gonna, because I'm gonna need this. So I think you guys can everybody hear me all right?
For the folks to hear you, for the folks to hear you online, you have to use the mic.
All right, so this is gonna be interesting for the folks online.
Don't
So
be
my
shy.
name-
That voice
My
sounds
name's
amazing.
Jason. My name's Jason. I'm from PNC Bank, and today we're going to talk a little bit about financial education, specifically managing student loan debt. So just a little story about myself is I'm originally from New York City. All right, there you go. I went to school to Nassau Community College. Then I went to Queens College for my 4-year, and then I went to Baruch for my MBA. So I know a little bit about student loans and managing that debt. But I will tell you that when I went to school, they didn't put something like this together. And I think it's really important that they do put it together, because one of the biggest obstacles, as the young lady said previous to me, was the financing and how we're going to finance this education to better yourself. So along with grants and scholarships, student loans is an option. So today we're going to talk about that. And we're going to be talking about student loan debt, not how to apply for student loans, but specifically how to manage those student loans when you have them. Next slide, please. So the biggest takeaway that we would like for you to take today is, when it's time to pay back your student loans, consider your options and understand what will happen if you're late with payments. Your loan servicer can help you explore repayment plans, so you have options. All right, so just don't ignore it. Just know that there are options there, and there's plans for you to help. Next slide, please. So with that said, what is student loan debt? So some people take out loans for different reasons: training, education, auto loans. All of these loans have to get paid back. All right. And the money that they owe in order to finance their education, that's called student loans, and that's your student loan debt. For some people, these student loans can be pretty hefty, and it's going to be their biggest debts. And for others, if you're not managing it properly and you don't know what your options are, it can be somewhat of a stressful topic for you. So you want to make sure that you're really educated with what's out there for you. Next slide, please. So I'm sorry, can we expand that? Because I need to see the top screen. You see how it's cut off on the top? So what else can happen? That's fine, don't worry about it. So what else can happen if student loan debt is not paid, and how's that going to affect you? Okay, so other things can happen if you fall behind on student loans, such as, oh, we go back one slide, I'm sorry. No, it should be, let's go forward one, fold right there. There you go.
Yes.
Thank you. So what things can happen? So not being able to obtain more student aid can happen if you don't resolve your debt. That could mean that you may need to take a semester off or two until you can catch up and make those payments. It also means it's going to have a negative effect on your credit report, and a negative effect on your credit report is going to impact the fees and interest that you pay, not only on your student loans, but any additional loans that you may do in the future. All right. Having your credit scores go down can result in negative information on your credit report. Having a harder time borrowing money in the future because of that negative information. Experiencing stress of owing the money, and that's probably the biggest one, because everything else can be resolved, but the stress kicks up, and that's hard to manage. And then being delayed in reaching your goal. So you might have to catch up and put a plan in place. So if you had a 2-year plan, maybe that 2-year plan now turns into a 4 or 5. So you just want to be wary of the things that can happen. Next slide, please. Okay, so go ahead one more because it looks like the slide. All right, so let's go to the next slide. No, go back one. I'm sorry. One more. So it looks like the slides that they sent you are not in the same order here. But let me just talk a little bit more about this. So what happens if you don't repay? You're gonna pay more fees and interest. They also could do something called the wage garnishment. Does anybody know what that means? So wage garnishment basically means when you get your direct deposit, your paycheck, the student loan that you got, they already took a portion of that from your paycheck. Okay, they could also do something called an account garnishment. The account garnishment, what that basically means is if you have a checking or savings account, they can put a hold and take the money right out of your account. And then you have other things such as treasury offset, which means that at the end of the year, when you're paying your taxes, if you're getting a tax return, they could take a portion out of that. So it's really, really important that you know what's going on with the student loans and not ignore it, okay? We can go ahead and go forward. All right, we already did this. So if you take a look, thank you. So if you take a look at your packet, we actually have an activity there. All right, and we're just gonna do this together as a group because I think it's just gonna be easier. So if everybody can get to that page, everybody's there? All right, looks like everybody's there. So do you have any student loans, including loans for you or a parent loan? All right. If the answer is no, then you don't continue. Congratulations, you guys are good. You don't have to worry about things. But if the answer is yes, then the question becomes, have you been able to make all those payments on time and as agreed? Okay, if the answer is yes, you don't have to worry about anything. But if the answer is no, the next one is, how has your student loan affected you? Right? So how could a student loan affect you? You're gonna end up paying more fees, late fees, interest, etc. Part of your paycheck can be taken. Money was taken from a financial institution, tax refunds, all that stuff can affect you. But again, I think the key thing here is that I want everybody to understand is, let me ask you this, right? Because we talk about the stress, but show of hands, if you're not paying back your student loan and you're working and then you get your paycheck and you see that a portion of that money is missing because you're paying back your student loan, who would be stressed out about that situation? I know I would. Right? Or if you got a savings account and you got money in the savings and then all of a sudden you go in and the balance is not the same, who would be stressed out about that information? Absolutely. So life is already hard. There's a lot of obstacles already there. And then when you add this to that, it just becomes more stressful. All right. So just be wary of the student loans. They're good, but you just want to make sure you're managing it correctly. We can go on to the next one. Next slide. All right, so type of student loans. You've got private student loans, and then you've got the federal student loans. Okay, so we're not really going to talk much about private student loans, but private student loans are when you would actually go to a bank. So you can go to Chase Bank, PNC Bank, and actually apply for a student loan. And those loans are usually, sometimes they're there because there's certain things that maybe a traditional federal student loan isn't going to cover, so you could get the private loan as kind of to finance a little bit more if you have to. All right, but we're going to specifically talk about federal student loans. You could go ahead. All right, so federal student loans repayment options. Give me a second because I want to make sure that I'm in the right slide. All right, so you may be used to dealing with your school or college about loans while you were in school. That's because federal student loan money is paid directly to the school you attend while in school. You might not interact with the actual lender much at all when you're in school. So chances are, while you're here for 2 years, 4 years, whatever your degree is, you're probably not going to be dealing with the student loans. You're just going to be having an increase. And then at the end, when you graduate, that's when you start making the payments. When it's time to start paying back your loans, you will deal with the lender and the servicer. You must begin repaying federal student loans after a grace period. So usually after 6 months, when you graduate, that's when you have to actually start making your first payment. Okay. There are several repayment options with federal student loans. The options we're going to discuss apply only to federal student loans. If you consolidate your federal student loan into a private loan, then those federal options are not available to you. Okay. If you do not choose something else, you will be on the standard repayment plan. So what does the standard repayment plan mean? Your payments stay the same. They're calculated so that you would pay off your loan in 10 years. You will generally pay less interest using this plan than under any other plan. Okay. You also, two repayment plans restructure the payments, but not based on your income. So you've got something called a graduated repayment plan. So what's that? Well, that's when payments are calculated over a 10-year term and do not remain the same. They start out lower and usually increase every 2 years. Okay, so the point there is when you first start at a job, you're probably making whatever the minimum was, but as you're there, your wages should increase, so your loan repayment increases a little bit. Extended repayment plan, payments are calculated over a 25-year term and may be fixed payments, or they could also gradually increase. You must have more than $30,000 in outstanding federal student loans to qualify for that specific plan. Next slide, please. So repayment plans based on income. There are also several repayment plans that restructure the payments based on your income. These plans may reduce your monthly repayment and the overall amount you repay. Revised pay as you earn plan. Okay, so that's the repay. This is payments are 10% of your discretionary income, which is the difference between your annual income and 150% of the poverty guideline for your family size. So that there's a lot to unpack there. Okay. But if you have some questions about that, there is a website where you can go there. Payments are recalculated every year based on updated information. The outstanding balance is forgiven after 20 years if all your loans are for undergraduate study, or 25 years if any of your loans are for graduate study. You may have to pay income tax on any amount forgiven. All right. The next one is the pay as you earn plan. Similar to repay with a few exceptions. You must have been a new borrower on or after October 1st, 2007. You must have received disbursement of a direct loan, or the repayment period is 20 years. Then you have the income-based repayment plan. Payments are 10 to 15% of your discretionary income. Payments are recalculated every year. The outstanding balance is forgiven after 20 or 25 years, depending on when you're considered a new borrower. And you may have to pay income tax on any amount that's forgiven. And then the last one is the income contingent repayment plan. The monthly payment will be lesser of 20% of your discretionary income, or the amount you would pay with a fixed payment over 12 years. There are many more rules and eligibility requirements when you have these plans. So if you're interested in exploring more, you can visit studentaid.gov. Okay. That website also has a loan simulator, and it can help you compare these plans and see which one makes more sense for you. Next slide, please. So then you also have something called forbearance and deferment. All right. So you may need to consider this as if you're struggling to make some of these student loan payments. So forbearance and deferment temporarily stop or reduce the monthly payment. They do not cancel your student loans. All right. They or forgive your debt. In fact, you may still have to pay interest during the time your loans are in forbearance or deferment status. So what exactly does that mean? Well, forbearance is a temporary postponement or reduction of payments. People can qualify for forbearance because of financial difficulties, such as high medical expenses, changes in employment, maybe the pandemic, something like that. People who owe more than 20% of their monthly gross income in federal student loan payments may also qualify for forbearance. And then you have deferment. So what is deferment? Temporary suspension of any loan payments. People can qualify for deferment based on active duty military service, some graduate fellowship, unemployment, economic hardship, and disability. Okay. Next slide, please. So loan forgiveness, cancellation, and discharge. You must repay your student loans even if you do not complete your education, cannot find a job related to your area of study, or are unhappy with the education you paid for with your loan. However, under certain circumstances, your loans may be forgiven, canceled, or discharged. A closed school discharge. That might be available if your school closes while you're enrolled or soon after you withdraw. Public service loan forgiveness forgives the remaining balance of your direct loans after you make 120 monthly payments under one of the payment plans while working full-time for a qualifying employer such as a nonprofit or a government agency. Teacher loan forgiveness forgives up to $17,500 if you teach full-time for 5 consecutive years in schools that serve families with low income and meet other qualifications. Total and permanent disability discharge relieves you from repaying your loan from repaying your loans. There are some qualifications for that. Discharge due to death, so you may apply if the borrower dies or if the parent of the student who borrowed the money passes away. And each of these options, again, have specific rules and eligibility for them. Okay, next slide, please. So take action to prevent default. If you have missed one or more payments, you are delinquent but may not yet be in default. For many federal student loans, you're considered to be in default if you don't make your scheduled student loan payments for a period of 270 days. Check your promissory note or loan agreement to see how they define default. Okay, and then to prevent the default, consider the following. Contact your loan servicer to find out if you can change your payment due date. If your payment due date is falling between paychecks, it might help you make that payment. Review the different repayment plan options and apply for a repayment plan you can afford. Exploring eligibility for forbearance, deferment, loan forgiveness, loan cancellation, or loan discharge. But continue making payments if possible until you receive official notification of your new repayment plan. Note that federal student loans are somewhat unique. They are not automatically discharged if you declare bankruptcy. Okay. Consult an attorney if you're considering filing for bankruptcy as a way to resolve default on a student loan debt. Next slide, please. So beware of student loan scams. So just like everything else, there's always scams going on out there. So you just want to be careful here. All right. Some companies may advertise that they can help student loan borrowers repay their loan quicker, cheaper, or get them forgiven altogether. Be cautious. Some of these companies are running scams. Here are some tips to avoid student loan repayment scams. Never pay an upfront fee. Never pay an upfront fee. That's like the first red flag you should have. Okay. Only scammers promise fast loan forgiveness. Use of a Department of Education seal does not mean the company is legitimate. And consider unsolicited calls or texts asking you for personal information to be scams. So again, working in a bank, I'm gonna tell you right now, there's a lot of scams, unfortunately, that do go on out there. Be mindful, because I've seen a lot of young people, because you're just not used to it. Okay. And just always remember these red flags, no upfront fees. And then anybody calling you to get personal information, you should ask yourself twice, why are you calling me? Who are you? What type of business do I have with you? Do I even have business with you? And if the answer to that is no, then don't bother. Okay. Next slide, please. So try it. This is exploring options for repaying student loans. Okay, so if you go, you're gonna see, you should see here. All right, so this is the scenario, and I'm just gonna read it, and then we'll try to answer some of this together. So Hugo is proud to be the first member of his family to graduate from college. The balance on his federal student loans is $27,000, not including interest. Okay. He got a job offer shortly after graduation, but the same day he learned that his father had a serious health issue. Hugo made the difficult decision to decline the job offer so that he could return to his hometown to help his parents and siblings. Hugo found a job in his hometown, but it does not pay what he expected to earn after college. Hugo does not regret his decision to return home to help his family. However, he doesn't know where the money will come from to make payments on his student loans. The grace period will be ending soon, and he still has no idea how he will make the payments The worry about his student loans is really weighing in on him, especially when his family is already under a lot of stress. So that's all the information we have on Hugo. But with that information, what kind of help or what kind of ideas could we give Hugo to help him in his situation? So we just did the whole, the whole presentation. Anything ring out that I talked to you about or that I talked about that might be able to help Hugo here? Well, what's the first thing we don't want Hugo to do? Let's start there. Okay, yes, we do not want Hugo to fall for any scams, because usually people in high stress situations are gonna fall for scams because they're already stressed out and they're just looking for anything to grab and try to get help. So yes, we don't want him to fall for any scams. What else do we want Hugo not to do?
At this time, I'm gonna jump in. At this time, if anyone online, hey Chris, good to see you. Anyone online, if you would like to answer this question as well, just go ahead and let Jonathan know. We've gone over the scenario and we've also gone over some really great information. See if you can answer. Don't be shy. We're a family. Don't forget, trio means family. So it's okay. Anybody.
So Hugo shouldn't ignore his debt. The first thing that he should do is reach out to his lender and explain his situation to see if there's anything that they can do to assist him.
What's your name? Because that was perfect. That's exactly what we want Hugo to do. Okay, so whomever that was, let's give it up for that individual. Applause, because that's exactly what we want Hugo to do. Don't ignore it. Reach out to your servicer. Let them know what your situation is. And once you explain that, they should be giving Hugo some options, which is he might be able to do something called the graduated repayment plan. The revised pay as you earn plan, okay? Pay as you earn plan, income-based repayment plan, income contingent repayment plan. So there are options there for Hugo, and these options are gonna be much better for him than just ignoring it and letting it kind of figure it out itself, because guess what? He's gonna keep his credit intact. He's gonna get the help that he's needed. He's probably gonna get some sort of income-based plan to pay it back. So it's gonna help him in a stressful situation not have to worry about this. Next slide, please. Okay, so this is basically what we just did, so we can skip all the way to the end, please. One more. Okay, great, right here. So again, we're pretty much done with the presentation. Again, I'm going to start off with the key takeaway that I did at the beginning, and we're going to end it with that, which is when it's time to pay back your student loans, consider your options and understand what will happen if you are late with payments. Your loan servicer can help you explore repayment options and plans. All right. Is there another slide after this? Nope, that's it. So with that, I thank you guys for your time, and this was fun. So thank you.
Give it up for Jason with PNC Bank, ladies and gentlemen. Thank you so much, Jason. That was amazing. That was amazing. Can we hear you, T?
Yes.
Okay,
yeah, my voice is here. Great.
So hold on, before you continue, somebody, before I answer, any piece of information that Jason just shared with us that really is going to stick with you? Anybody? Other than, I love when you said about scamming. Great job.
Teacher, so something that stuck with me is the teacher loan forgiveness, which applies up to $17,500, and the person applying for the fund forgiveness must teach for 5 years. So that's something I'm gonna remember.
Love it. Hey, round of applause for that. That's what I'm loving. I'm loving it.
That's my student, by the way.
Oh,
that's
get
my
out here.
student.
Come, wait,
Sorry,
Thomas,
I just had
your mic's a little louder. Go ahead for this young lady.
And always attend to your advisor for any of this.
Always see your advisor.
Come on.
Very good answer.
Love
Very
it.
good answer.
Love it. So good.
What I love that Jason shared is within all the plans, have a plan. Don't just go into it accepting a loan, ignoring a loan. Have a plan. Meet with your advisor. Have them sit down and talk about finances. Sometimes they're using language and words, forbearance, default. What does all that mean? It is the perfect time to sit down with someone who's knowledgeable about this information. it's important that you know it now. The sooner you can grasp this information, the better. So as you grow older and you decide, you know what, I want to go get my master's. You know what, I want to go get my doctorate.
Yes.
You're already in a space to understand what it is and what you're signing away to make sure you make that money. And then just to, Thomas, I see you. Just to
Go ahead.
add, Broward.edu has revamped their website. It is amazing. And they have a section for the career coach. And you can go through career coach to see what kind of career fits with you. So you'll see what your paychecks may look like. And then you'll know what kind of loans that you can take out and pay back just based off the education that you're going to solidify and secure. So
absolutely.
Yeah, T, go ahead. Come here.
So we're going to take a little break.